Hello, this is Matt on the Moon Lambo channel, and this is one of those things that I've been saying, just at least in my opinion, it makes a ton of sense to track for. This idea of institutional money flowing in, ultimately, because you think about it. Bitcoin was purported to be this massive Ponzi bubble at the end of 2017, yet here we are years later. First of all, it still exists, and what's this headline? It's from Daily Hodl. This one's titled, "Here's Why Institutional Interest in Bitcoin and Crypto Markets is Rising," according to Huobi Global. Now, it's, when you're talking about institutional investors, these are not your everyday Joe Schmo type of individuals here. Do you think that there could be that many that are this susceptible to something that's an overt scam? Or is it maybe the case that the crypto asset class is here to stay and people are just trying to figure out which cryptocurrencies are actually going to be the winners? I think it's the latter. I couldn't be more confident of that here. And so as an XRP holder myself here, one of the most important things, in my humble opinion, that can occur to ultimately increase the price, which is different than value, but increase the price of any cryptocurrency, certainly including XRP, it would be new money flowing in from institutional investors that get the big picture. Crypto's not going away, and you can either jump in early and experience more asymmetrical returns, or you can jump in later, just to diversify. But it's important, and it's so. I was going to say, what I was the reason I was hung up on that sentence there is because it's not that retail investing isn't important as well. But when you're talking about where massive quantities of wealth could be coming in the next time there's a parabolic rally, my gosh, it just seems to me that some of these institutions, they get it and they're just positioning themselves now. And you had a report the other day, and I shared this, that, and it was actually kind of negative. It was about how Grayscale, which is gigantic, by the way. My gosh, they've been blowing up. They've been investing more so in Ethereum and Bitcoin, but the way that they weight their portfolio, I had a story about this where they decreased the amount of XRP. I remember it's by like 1.4%. They also decreased the way that they're weighting for Litecoin and Bitcoin Cash, I believe it was as well. And what's fascinating is that even with the new weighting, overall, given how much they're growing, how much money's flowing in, my gosh, it's got to be a net plus for their actual XRP holdings, even if 1.4% weight difference at this point. So anyway, we're going to run through this, and this all amidst this negative backdrop here. Look at this from Daily Hodl. Ripple's XRP remittance volume plummets 92% as crypto startup changes strategy. So lots to talk about, but before we go any further, if you would please delicately tap that like button, but no need to get all smashy here. And also, if you are a fan of Ripple and XRP, I think you just might be the coolest person I've ever not met. Since I complimented you, return the favor by subscribing to the Moon Lambo channel. Alright, so let's jump into this one now. Institutional investment. Well, crypto exchange Huobi says institutional interest in Bitcoin and crypto markets is on the rise as investors' appetite for an alternative asset class grows. In a press release, Huobi reveals that its recently launched futures and swap trading platform hit $5.2 billion with a B in volume as of May 6th. The crypto exchange estimates that institutional investments, check this out, account for up to 40% of the total volume on its derivatives trading platform. I'm telling you, institutional money in the space is alive and well. More so than that, it seems clear to me that it's growing. And on the way down, you consider the highs, especially. I guess so. Bitcoin's all-time high, it was in December of 2017. Then you had XRP's all-time high roughly halfway through January of 2018, and that whole era right there, that was pretty much the beginning of the end of those types of price levels. And I think that it was pretty clear that institutional investors kind of, sometime prior to that, they pretty well, most of them had taken their foot off the gas in terms of investing. And what is the smart money doing? It looks like they've waited. And they've some of them waited. You're never going to time the bottom, so maybe some jumped in a little bit too soon, maybe some a little bit later than they should have. But they're like, okay, this seems like a safe place to jump in. If you're of a long-term mentality, it could be a good opportunity. And by the way, I don't have a financial background. I'm just sharing opinions, like don't buy or sell because of me. I zero financial background, and I don't pretend to be anything that I'm not here. I'm just an enthusiastic member of the XRP community that likes talking about this stuff. But Huobi says the growth in institutional investment could be due to the financial uncertainty that has risen in traditional sectors due to the pandemic. The uncertainty appears to be driving investors to look for alternative investments. And so this is going to be another piece of the pie as well. It's perfectly reasonable to posit the concept. So here's a quote. People have seen Paul Tudor Jones praise Bitcoin for its potential as a speculative asset, stating he invests a small percentage of his portfolio in the coin, but expects it to be the best performer. People have also seen Grayscale Bitcoin Trust buying up a major portion of coins newly mined after the Bitcoin halving. Yeah, Grayscale, they are super bullish on Bitcoin. That could not be more clear. Even more so than XRP, even though it doesn't do anything, which, you know. Sierra Sun, Vice President of Huobi Global Markets, says cryptocurrencies possess unique features that are not seen in other asset classes. And here's a quote. The crypto market is unique in that it can fulfill both demands in liquidity and volatility. For example, traditional investments like real estate have price volatilities but lack of liquidity. Foreign exchange markets have high liquidity but lack price volatility. Investors see arbitrage opportunities in crypto as an emerging market. An above-average range annual return can be seen as good performance in the traditional market, but is actually a quite mediocre return in the crypto derivative market. Yeah, not just there. I mean, any sort of gain in the world of crypto, and not just derivatives here. Any sort of gain in the world of crypto, my gosh, whatever is normal there, go the norm for any other asset class, and it just puts it to shame. It just, historically, it has. Crypto has, and I know there's only a little over a 10-year history here, but that's what it's been to this point, because there's just this frenzy around everything, and more money, more people keep flowing in. But anyway, besides satisfying liquidity and volatility interests, Sun also says investors consider crypto as a way to hedge against economic policies imposed by governments. And it is an undeniable truth. There's a certain percentage of the people that will always have something like this weigh heavily in their decision to invest. I think for the average person, somebody like me definitely falls in this group. That is not a consideration. Not really. It's just something I'm aware of, and for me, it is not the reason. I'm sure for some of you listening, it actually is. And I think you'll see more of that in the Bitcoin maxi side, but I'm still very confident that people in the XRP community, there's got to be a certain percentage out there that kind of matters to them at least a bit, right? But here's a final quote for this piece. Traditional assets are directly influenced by monetary policies and economic measures like quantitative easing, but digital assets are decoupled from the acts of any one nation or governing body. Exactly, and I won't pretend like there's nothing to that. I do think there's something to that, for sure. I'm just saying, for me personally, I'm like, okay. See, but everybody's different, right? Everybody wants different things. So what about this piece now? Ripple's XRP remittance volume plummets 92% as crypto startup changes strategy. And this, even as recently, XRP has been up with pretty much the entire altcoin category in this particular asset class. And so what's going on? Well, Ripple's remittance platform On-Demand Liquidity is witnessing an exponential drop in volume as the San Francisco payment startup changes its strategy in a COVID-19 world. New statistics reveal that On-Demand Liquidity volume peaked in May with a total of $316 million across 4 channels, including Bitstamp to Bitso, Bitstamp to Coins.ph, BTC Markets to Bitstamp, and BTC Markets to Coins.ph. So those are all officially partnered cryptocurrency exchanges in various corners of the world. All right, On-Demand Liquidity volume took a 92% nosedive in June, as the volume in all 4 channels amounted to a total of $25 million. Now, we didn't know exactly to what degree it was going to take a dive, but it became clear it was going to be massive as soon as Ashish Burla wrote up that Ripple Insights blog piece about how they were just changing their strategy in a notable direction. Some people flipped out about it. I personally didn't. I just didn't know, and you didn't know. None of us knew. Maybe Ripple did. Or maybe they probably had an indication of to what degree is this going to impact remittances in terms of liquidity, volume, everything, at least in the short term. And I don't think that as they're changing their particular business model here to focus on what actually ultimately makes sense, I don't think that this is something that's, if you fast forward 1, 2, 3 years, whatever it is, it'll ultimately be a big nothing. It's not fun to hear 92% down for anything, but it doesn't fundamentally change the actual real-world utility of XRP. It's in terms of the way that Ripple's positioning XRP as a bridge currency, yeah, it's a little bit of a pivot, but so what? Now, Ripple's Senior Vice President of Product Management and Corporate Development, Ashish Burla, again, predicted this drop. It's just we didn't know exactly what it was going to look like. And here's the quote, though. We are continuing to focus on supporting low-value, high-frequency payments with on-demand liquidity through transaction volume, though transaction volume may look different in this new world. In particular, we are reducing emphasis on large treasury payments, which are traditionally used to fund businesses and services in the absence of real-time transfers, to support individual low-value transactions, addressing the growing need in remittances and SME payments, so these small and medium enterprise payments. This may reduce overall transaction volumes. Yep, it sure did. Didn't know we were going to see this kind of drop, but not in terms of percentage. But again, my gosh. I just don't think. Look, here's the thing: if there was real uses, and it's notable, as we here in the XRP community believe it is, this real world use case of XRP as a bridge currency, then either it's gonna work or it's not, regardless of Ripple, has stumbling blocks along the way. But when you're starting a new business, especially when a category like this, where fine, they're a fintech company, but this has never been done before. Would you expect every sort of development to be flawless, or can it be a reasonable position to hold that they should be able to learn along the way? That's the position that I take. I see no problem with it whatsoever. If anybody can ever create a compelling case as to why the adoption of XRP as a bridge currency either won't happen or won't be significant, isn't going to actually in any notable way change the way that money moves around the planet, then fine. Go ahead. As long as you're not being a troll and you actually mean it, I'm happy to have that discussion, because I do like diversity of thought, but I'm just not seeing it. So I'm just going to sit here, sit tight and keep tracking all of this, because it is a blasty blast to follow this stuff, in my humble opinion. But that is it for this video. I am not a financial advisor. Do not buy or sell anything because of anything that I say are right. That would be a very, very, very bad idea. Until next time, to the moon, Lambo!